Good afternoon, traders. Welcome to the webinar. I'm glad to see so much of you. Hope we get more traders as we start and we go. So the recording is on. Let me get everybody in, and I hope all of you can hear me very clearly. If you're not getting sung, please click. Somebody will type. Can somebody please retype how to get sung, because there may be people who came in just now that may not be getting sung. The guys will type it in the chat, right? Great. Let's go. Today, what I want to look at. Today, I want to look at some of the big trends that is coming, as well as I want to help you guys understand what we do as wave traders. Right? I guess most of you may have got this link from TradingView, and you've already seen my record in TradingView, so I need not tell you what it looks like and how the trades goes. Right? So let's start. I would first start with the basics. Let me just go through what we do as waves, and at the end of the webinar, or in the middle, I'll show you some of the trends we were expecting, and then at the end, I'll take some questions. So basically, what really is wave analysis, right? Because a lot of traders are there, are trying to do it. Some people are learning from what I do. They're not getting the concept as easy as it is. And, some bogus people think they know what they're doing. Well, we can't help that. There are always going to be those traders who think they know what they're doing until they realize what they're doing is incorrect. It will take some time, but they will come on, right? We've all been there, and it took us some time to realize that, I traded support and resistance for a short time. The guy who taught me actually was teaching me support and resistance until I realized that he is doing nonsense. And, I left and started learning this stuff on my own, right? So it's not like I haven't been there, I haven't done that. It's just that I know it doesn't work. I've learned that. I've studied those stuff and realized they don't work. So what is wave analysis? Wave analysis is based on a lot of people like to say Elliott wave, right? And the Elliott wave theory. But Elliott was not the first guy. Let me just get this clear to you. Elliott was not the first guy to realize that the market moves in waves. He is not going to be the last person to finalize what those wave structures should look like. I can guarantee you that there is no end to how this thing could develop and how it could be, be mastered, how it could be made much better, because Elliott did leave a lot of work unclear. And one of the main things that he left unclear was, how do you identify what is a wave? Which is why people will say, most of you must have heard the saying, if you take 20 Elliott wavers and put them in a room and give them the same chart, you're going to get 20 different counts. And the reason for that is because they don't know. Each one of them doesn't have a definition of what is a wave. Where does a wave start and it ends? How do you know that that is one wave and that is not 3 waves or 5 waves or 7 waves or just 2 waves? And some of you may have seen not so much as an argument, but one troll in my chart was trying to prove to me that he sees a 5-wave structure where the entire world could clearly see it's 3 waves, right? So that's a problem. Are you seeing 5 waves in that thing, or are you seeing 3 waves? Maybe 6, maybe 7. And the reason for that is because they don't know what is a wave. They cannot identify a wave. They don't have a strict rule system that sets up to say, this is one wave. That's it. Full stop. There is no exception. And if you keep using that over and over, your analysis is going to be pretty clear. Right? So that's the whole point. The whole point is, how do you tell how many waves is in that structure? And how do you trade it? Right? It's very clear. That is something that I have managed to do that Elliott never told us. Identify a system, have a systematic way of identifying what is a single wave. And then we can tell how many waves is in any structure. Is that a 5-wave structure? Is it a 3-wave structure? And if it is a 5-wave structure, is it a motive wave or is it a corrective wave? Right? That is the whole problem. Can you identify these? And that is what wave analysis is about. It's not about putting letters and numbers on the chart. You can do that. Any one of us can do that. I guarantee you, all of you can do that. All of you know the alphabet, and all of you know the count to 5. So you can all do that. The question is not doing it. The question is doing it correctly. That's the whole point. Can you do it correctly? And here is how you know you're correct. When the analysis you're making work. Right? When you make a forecast and it works, then you're doing it correctly. If you're making 20 forecasts, and 90 out of them is wrong, but you insist that you know this stuff because you've read the book, well, something is wrong with what you've read, or something is wrong with your understanding of the book. And I think that's the basic problem with Elliott waivers. right? The entire theory is based on something that makes a lot of sense. The wave analysis is based on the theory that market moves because of mass psychology, right? That's the simple explanation that Elliot could find, and I said he could find it or that he could give for why this is happening. I think it's more complex than that. It is not just mass psychology. It is everything. It is the way nature works. It is mass psychology. It is manipulation. It is every single thing that will happen in the world built in already in that structure. That is why I would say I do not look at news events. That doesn't mean I'm totally ignorant of news events. So if some of you want to troll, just beware that I can challenge you in news events and I'll be much better than you at them. Believe me. But I don't use it in my trading because I understand that the news I get from the TV is useless. It's for mass consumption. It is not for the elite's consumption. I don't have access to those who know. I have access to the mass news, and the mass news does not help me. Those who know something else from what you're getting from the mass news. And if you're using what you're hearing in the mass news on some website or some TV or Bloomberg or whatever, you're being misled. You're actually being misled because what they're giving you is the news that they're getting from for mass purpose. And the key, if any one of you know anything about how news are given to people, the key to it is give the mass three options to argue which one is correct, but don't give them the correct one. So you want to know why there is a war somewhere? The politicians are going to come out and they're going to give you three options: one for the left, one for the right, one for the center. Let them argue to see who is correct, whose choice is better, who thinks they have the right one. None of them will know what is the right answer. They were never given what really happened. They're giving three options of what happened to argue over. So when you get news from your TV, mass news, and you hear a politician come out and says, well, we shouldn't do this, or well, we should do that, and well, we don't know if we may do it or we don't know. You're not understanding what they're doing. Nobody's telling you. Not the left, not the right, not the center is telling you what is. The people who have access to what's actually happening in there are not telling you the truth, and they will never tell you the truth. That's a fact anywhere in any system. The guys who can move this market will never tell you what they're going to do. They wouldn't. That's it. They're not going to come out on TV, and you would not see Citibank coming out on TV and said, "Well, we plan to do this." They're not. It's not going to happen. Right? It's a blank screen. I'm just talking. I'm just telling you. I'm explaining to you how wave analysis work. I'm not drawing anything as yet. Don't worry. What is the theory behind wave analysis? So I don't think it's just mass psychology. It's more than that built into it. Right? But here is the point about the good thing about wave analysis. You don't have to understand the why the market moves because you will never understand it. And let me repeat this. I can challenge any one of you in it. There may be some of you in here who are, oh, well, I trade fundamentals. Well, you can keep trading fundamentals, but you don't understand it. You don't know. If you think you know why it's moving up, you're making a wild assumption that is crazy because you don't know why. You can tell me I know it's going to go up, and you may be correct in that, but you don't know why it's going to go up. Right? You don't know it. You will never know it. That's a fact. Right? And we have seen that many times. So, but what you can do if you follow wave analysis is you can make a very educated assumption as to the direction it is going to go. And it's simple. Now I'm going to draw so that you can understand what wave analysis is. You're going to have a very fast movement. Very, very fast movement. You're going to have some slow movements. And then you're going to have a very fast movement. These are what Elliot calls the impulsive or the actionary waves. This is what he called the corrective waves. And by studying the charts, what he said, what is all the chat about? Can you guys stop the chat and wait until I'm finished for questions? Please. If you don't want to learn or you don't want to get anything, don't troll. Just keep the chat quiet for a while. It's gonna help you if you really want to learn a thing or two. Right? This is what Elliot did. By studying the charts, he figured out that the chart creates patterns, and those patterns repeat themselves. It means they behave the same way over and over and over. And he studied years and years of it. If you do the same thing, you will come to the same conclusion. I do the same thing. I came to the same conclusion that they repeat themselves over and over and over. Which means if you can clearly identify a pattern, you can trade it. And you would have a 90% probability that it's going to behave the same way it behaved the last 20 times or the last 100 times. And you're going to be on the right side of the trade. That is what is wave analysis. It's not understanding why it does that. It's understanding that it does that every time. The biggest problem with traders is understanding or recognizing those patterns in the chart. Recognizing the pattern, understanding how patterns behave, and how you can trade them. That is the biggest problem with most traders. They simply cannot see the patterns in the charts. And that is what we help you to do. Identify the patterns. Right? It's as simple as this. An impulse, a correction, and an impulse. The biggest problem traders get is this. It's not catching this. It's figuring out when to go in the trade with this. So they go in the trade and they make about 6 losses in here. They try to buy. They make about 6 losses. They give up. And, by the time they give up, this happens and they never get into that trade. Right? They never get into that trade because they don't have an understanding of how the corrective structures will be. So let me explain to you now how you can use that. Now that you know what wave analysis is about, how can you use it, regardless of what type of trader you are, to make money? I will show all of this in the real charts in a second. Just give me a second to show you and draw it for you, and then I'll come back to the chart. If you're an advanced trader, what you're going to do is you will find the impulse, which is called the XA wave. You would look for your first correction down. By Elliott waiver team, we will call this the A wave correction. You're going to call this, if you're an advanced trader, we will call it the A wave correction if you're an Elliott waiver. If you're an advanced trader, you will call it the AB. You will call it the AB. You will call the B wave the BC, but we call that the B wave. If you're an Elliott waiver, you call that the B wave. And then you would be looking for the C wave down. Elliott waiver, we call this C wave. If you're an advanced trader, you will call it your CD. And then you will draw your pattern here, right? And you would look for that to go up. So if this is so simple, why do advanced patterns people lose a lot of trades? And from one advanced pattern guy who is supposed is a pro with advanced pattern said 60% of his trades he loses. He wins 40%, but because he's winning 2 to 1, 3 to 1, he's up in profit. So can he make that much better? Of course you can. That is if you understand that this corrective structure here does not move in a simple 1, 2, 3 A, B, C, D pattern. It doesn't move like that. That is not how it behaves every time. That is how it behaves 40% of the time. And that is the 40% you're winning. 60% of the time, it does not behave like that. 60% of the time, there is an absolutely different corrective wave structure in there. And that is why you lose 60% of the time. Right? Because the reason you lose 60% is because it's a different structure. So if you study Elliott wave structure, if you study the wave structure theories as we teach it, if you study that structure, you would understand that this is one of the time it's not going to go. And that is going to help you eliminate at least 40% of the 60% you're losing. So just imagine what your account would look like. If 40% you would win anyway, 40% you would either get break even because you know that it's not over, it's not the pattern is not complete, or you will not be in the trade. And maybe 20% you would still lose anyway, because we still make mistakes. We still jump in too early. We still put our stop too small. We still, we do a lot of things that we're not supposed to do that end up with the losses. That's okay, right? It may not go to your target and then come back, comes like just break the top and then come back and still take you out, right? All those are possibilities, right? So let's still give 20% for human errors that we would make, that we would lose. But this 40% that you're losing here, you would gain. So just imagine how your account would grow if you're not losing 60% of your trade, but only 20%, and 40% you're getting break even. So if you were an advanced pattern guy, understanding the wave structure is will make your trading account grow enormously. Not only that, you're going to get much more than 40% winning trades. You're going to be on the high side of it. You're going to get about 60 to 70 to 80% winning trades now. So not only would you increase your winning trades, you're not going to have so many losing trades. That alone is going to make your account skyrocket. That is the difference with understanding structure and just trading advanced patterns. Right? If you're a support and resistance guy, the reasons what support and resistance guy is saying is that if the chart is doing this, at some point when they come back to these levels, they're going to respect them. And that is not true. They do that sometimes. So let's say we are coming back for after a 1, 2, 3, 4, 5 correction. They're coming down now. Yep. Probably when they start to come down, they'll probably do this. They may respect this if the A wave end there and go back for a B wave and then come back for a C wave. They're going to break it and then go back up. So if you buy the first time, you win. If you buy the second time, you lose. Because they're going to break it. The C wave is definitely going to break the low of the A wave more than one time and then go back up. So if you were trading support and resistance, but you have a clear understanding of what these patterns should look like, right? Here. You're probably going to save yourself the buy here. Right? You may say, oh, this is a C wave going down. I'm not going to be buying that support. It's not going to hold because it doesn't exist. It simply is not there. Right? That's just your imagination that they will use that. Right? And sometimes you're lucky, sometimes you're not. 90% of the times you may not, 80% of the times you may not be lucky. Because like I said, remember the advanced pattern, it is not a simple three-wave structure. That is not how the chart moves. They don't move in simple three-wave structure. They don't move that simple. The corrective structures are very complex. Right? When you learn to use them, you will see how complex they are. And here is a good idea. Wasn't this a three-wave corrective structure? Shouldn't this go? But it's not going, right? And the likelihood is it may not go. It may come back all the way to this 618 and then go. So if you're understanding structure, you will understand why it behaves this way, right? You may understand what these structures look like, and you will know how to trade them. That's the important thing. You will know how to manage your trades when you're in the trades in these type of structures. Because you understand the structure. That's the whole point of it. That's what we do. We don't do magic, right? We see something that we know. And I said this once, and then a few guys jumped onto me and said, well, nobody knows what the market is doing. You are correct. Don't listen very carefully when I said, I don't say I know what the market is doing. What I said is I know what these patterns will do. Now, just make a difference. It's not what the market is doing. It's what these patterns will do, how these patterns behave. I know because I studied them. I know if I add 2 and 2, I'm going to get 4. I know how these patterns behave. And that is what we trade. We trade the behavior of these patterns because they behave 90% of the time, they behave the same way. And that is what we trade. 90% of our trades are going to be on the right side. It's not that we are predicting what the market is going to do. We are predicting what these patterns are going to do. And we are 90% correct because we know what they do. We study them. We understand them. We can clearly identify them. That is the difference. And that's a huge difference from just putting your advanced pattern and hope it works. This is what advanced patterns say. You just put them and you hope it works because you don't know what the market is going to do. Well, not knowing what the market is going to do is not a reason to buy and sell anywhere. You still have to do your work. You still have to study. You still have to make sure you are trying to be on the right side of the trade most of the time. And if that confession of 60% losing trade is correct, then you're on the wrong side of the trade 60% of the time, which is wrong. That's not the best strategy. Even though your account is growing a little, you could make it grow much better if you understand wave analysis. if you understand how these wave patterns behave. And just don't put an advanced pattern and hope it's going to do that, because sometimes it doesn't even tag you, because sometimes it doesn't go to the 680. And it doesn't tag you means you're not in the trade. There are reasons, there are ways we can look at this piece as it's developing and tell you whether it's going to get to that 618 or not. That is understanding patterns, tells us whether it's going to get there or not. And if it gets there, we know how to trade it. If it doesn't, we know what not to do with it or what to do with it in that case. Right? That's the difference. It's not magic, or it's not, any fancy thing. As people are saying, we didn't create anything. Let me get this clear to anybody. We didn't create. We're not using a single indicator. We are not using a single indicator to make the trade. We do use some tools to trade, like trend lines, fibs, and so those are tools to identify, to help us to trade, but we don't use them as the basis for our trading. So I put these lines, and people say, well, you have those lines there. Why don't you believe in support and resistance? No, they're not support and resistance. We change these lines very often because they're not the purpose of our trading. That's not what we do. These lines are actually telling us what the pattern is. They help us put the pattern in the box. Like, can you draw a square? Then you take 4 lines and you do this. Can you draw a triangle? You take 3 lines and you do this. That's what we use the lines for, to tell us what the pattern is and not how the pattern is going to behave. It's different. It's absolutely different. You don't know that, and some people believe, well, you have a trend line. And as one troll wrote on my chart, which is very funny, he made my day. He said, well, I called him and he told me he's using the trend line strategy. I'm like, do I have a trend line strategy? I really don't know if I have one, because I don't. It is very funny because this guy, he wanted to control the charts, and he doesn't have an idea what I do, right? But that was funny. We do have a lot of trolls in the chart, and that's normal. That's part of the game. If you're going to be the top trader in TradingView, you have to expect that there are going to be people who will be trolling your charts. There will be people who are going to be unhappy about you. If I'm doing a webinar and explaining to you why support and resistance don't work, I can show that after this webinar, I can go into my charts and see some people who use support and resistance start trolling my charts. Some of them even create special ID for that. As a matter of fact, one guy in my room, I'm not going to call his name, but he actually confessed to that. He said, when you did your first advanced pattern trade, you don't have to identify yourself, right? Please, if you're in here. Just to let people know. He said, I actually wanted to create an extra ID and troll your charts because I thought you were, you're doing crazy stuff. You shouldn't complain. You shouldn't do that. You shouldn't talk, like that against people who use that advanced pattern, because he was using it. And then he listened to more of my webinars, and he's in my room now, and he's enjoying himself, and he's doing well, right? So that, this happened. All of you are welcome to come, right? Like I actually, in one of my webinars, or in all of my webinars, I'm going to do it now. I said you should never pay subscription fee monthly, because if you're doing that, all those guys are doing is collecting their monthly salary from you. And oh my God, I got some messages on TradingView and on Skype. I got messages of traders who really run me down for that. How can you say that? I don't. One guy even said, well, what happened to your subscription? You're trying. I don't have a subscription base. I don't take subscription for my traders. We have a room. We have a trading room that works 24/5, and I do 2 webinars daily. And I don't charge a single cent as subscription a month for that. No, I don't. It's all free to my traders. It's absolute. If you are paying subscription to anybody on a monthly basis, you may as well take your money and run. Because that is how they make their money, collecting it monthly from you. I make my money from trading. The only thing I charge for is 6 weeks of my time if you want to learn what I do. And then you have the rest of your life. Just imagine this, the rest of your trading life that you will be trading, to be with me and to be with all my wonderful traders, very experienced guys in the room, and don't have to pay a single cent. You will not have that burden that every end of the month, I have to make enough money to pay for my subscription. No, you will not have that burden. That's not what we do in our room. We don't charge traders for that. If I've taught you to trade, you should be a good trader. So I should not be charging you money to stick around. And as a matter of fact, some of the reasons they charge money for you to stick around is they don't want you to stick around. Because if you stick around long enough, you're going to figure out something is wrong with that methodology. It's not working. And if any one of them is doing 2 daily updates to you, I would challenge you to this. Any course you finish anywhere, that they're updating the chart twice daily live for you. And asking you to ask questions, to challenge if you want. Tell us what you see. What you told us this morning is not working. Come on, let's see what happened. What did you go wrong this morning? And you'll be having those questions day in, day out. No, we don't get that. Most of what we do in the morning actually is working very nice in the afternoon. That is why I do it twice daily. And that is why I still have all my traders to stick around freely to question that, because they're there and they have proof that it's working daily, twice daily. They're not going anywhere. They were there last year, they were there the year before, and they're going to be there 5 years from now still to see that it's still working. And they're very profitable. That's the difference. They don't want you to stick around. They want you to pay a high fee so that you will leave after a year, or after you figure out your account is disappearing, you may leave. Because it's not, if they keep you long enough, you know you're going to ask questions. Like, hey, what the hell is happening? Come on, you said this day, every day you're giving this and it's not working, right? See? So we want you to stick around. We actually encourage you to come here and be with us forever. We actually encourage you to make a contribution to the room in terms of your analysis, in terms of what you're doing, in terms of trade calls. And that's what we get. Great traders trading together. No charge. Even if they make profit, and even if they want to pay me, and most of them will want to pay me, we don't do that. It's a huge. Most of you have called me and asked me for subscription to the webinars after the 1 week free webinar where you made money. No, we will not do that. Show you how I identify patterns? Well, that's a whole 6 weeks training course and the next 6 months of practicing it. If it was that simple in one webinar, I'll show you. Right? But I can tell you, you can look at all my charts. Go look at all my charts. Take 100 of them. This is a challenge I give to any trader. Go look at 100 of my charts. Pick any other trader in TradingView and look at 100 of their charts. Put it together. How do you get into my chat room? By taking the course. So let's come back to, we'll look at that afterwards. Let's come back to what we're doing, right? Trading patterns. So I've shown you how if you're trading support and resistance, or if you're trading advanced pattern, how that is going to help you. Now, if you are trading moving averages, please just forget about it. Just stop doing that. And by moving averages, I mean any moving average line you're drawing in the charts. Whether you call it Ichimoku cloud or not, it's just a number of moving averages. And the more moving averages you put on, the worse you get into your trading. Some people like to use 2 moving averages, which crosses over, and so they're all lagging. By the time you get into the trade, half of the trend is gone. Right? And if you're putting a cloud in between some of them because you have 6 moving averages or 12 moving averages, or one guy I saw had a bunch of moving averages in his chart and he's waiting for all of them to squeeze and then it's going to fire, it doesn't work. It simply doesn't work. Here's how you need to know it doesn't work. Go onto their charts, take 100 of the charts they put and test it. See what happens to 100 trades that they make. If they give you a 100 trade call there. And you will see whether it works. That's the ultimate way of understanding whether the system works. Right? The ultimate way of understanding how any system works, whether it's advanced pattern, whether it's wave analysis, whether it's Ichimoku, whether it's support and resistance, whether it's moving average, whether it's the pin bars, right? It doesn't matter what system. You find a trader who trades that system. You go take 100 of his charts and you collect the stats. Right? That's the ultimate way. Can you guys keep your questions for the last? I'll take the questions if you want. We'll look at the impulse and we'll show you that it's not as simple as the hero you're talking about. If you're right, you have an impulse, when a consolidation, then a consolidation, then a trade, and then another. Yep, that's how it works. You have an impulse, a consolidation, another impulse. You're looking at one right here. Right? It's not difficult to see it. You're looking at the trade right here. You have an impulse. You have a consolidation, you have another impulse. We are anticipating another consolidation, another impulse to the downside. That's what we are trying to trade. 90% of the time, we're on the right side of the trade. See? It's easy. It's easy, but it's not that easy. Believe me, if it was that easy, you'll all be doing it, right? It's not that easy. Those are the bases. That's like, think of Lego, right? You have pieces in Lego that you can fix, right? So you can fix this number of pieces and you will have this structure. Then somebody come along and say, okay, can you make a truck out of the Legos? Look, here's a bunch of Legos, make a truck. And you're like, damn, I can't do that. Well, you can actually do it, but you don't know how to do it. It's the same thing here. The chart is most of you may have heard that the chart is fractal in nature. What that means? That means that every small piece compile is going to give you one big piece. So if you're looking at a three wave, let's say you're looking at a three wave structure on the 5 minute, that looks like this. This is only one piece on a 1 hour or on a 15 minute. So a 15 minute, if it's a three wave and a 15 minute, this probably would look like this. That's still three wave, right? Let's go with the blue. It's still three wave. And if the 15 minutes look like that, this may be just one piece in the 1 hour. So the 1 hour would probably look like this. I hope you guys could still see the drawing because I'm drawing out of the black screen, right? You can still see that three wave, right? Great. And that may be just one piece on the 4 hour. This may all be one piece on a 4 hour chart. I don't have space to draw the other three, but you may still see three waves in the 4 hour, right? So it's called the fractal nature of the market. That is why it's not so simple to understand. It's the basis of it, but it's not that simple. And that is why we have people who train you to do that. It's a training course we have. It's not a series of webinars. It's a series of training. We actually have you do it and correct what mistake you're making, right? So let's look at the Aussie and the daily because this was a big deal of whether this is a three wave or a five wave or all of that. And simple. It's very simple. You just have to look at it. Sometimes you can look at it and you can see it, right? You don't really have to go deep into it, right? And this is it. This is a wave. This is a wave, and this is a wave. If you see anything else beside that, please stop using that thing you used for lunch or breakfast this morning. Stop taking that because that's a three-wave structure. We identified it as a three-wave structure. The system we use by the rules identified it as a three-wave structure, and it is a three-wave structure. Now you can create a 5-wave or a 7-wave or a 12-wave or a 15-wave if you want in that, but it's a three-wave structure. See? But that's not the end of the move. That's just the first wave within a bigger move in a weekly, right? So in a weekly, you're probably looking at, let's take everything out from here so I can give you some idea of how it works. Remove all drawing. And a weekly, you're looking at here's a lot of people going to freak out. You're looking at 1, 2, 3. So a lot of you could start freak out right now because you're looking at 1, 2, 3. This is a three-wave structure. And by the way, this one is not ended as yet. We don't know. This one is likely going to have 5 waves in it. We're making the assumption that this here is going to have 1, 2, 3, 4, 5 waves in it. This is one wave. That's a corrective structure, and this is your first wave done. See how simple it is? It is simple, of course. So our assumption is based on the fact that we're still in the downtrend. That's one. And there are other things that we're looking at that tells us, you know what, this could be still going down. And one of the things we're looking at is the behavior at the top here. You see how this thing was doing like this at the top here? Let me see that. See that? Before it breaks? You want to see the drawing that I had in it in the daily? And it was in the daily or was the week? It was the daily, right? That's exactly how we thought it's going to behave. And when I posted that, that's exactly, see that piece there? That's exactly how we thought it's going to behave. It is going to do this and then break. So why we're in the sell? Because we have the break. Right? It did not get this much, but it's crawled up slightly there and it's breaking. So the structure has slightly changed, but that's what it did. And we have got the break. Why are we in that trade? It broke. See that? It's broken, and it's consolidating. So as far as we are concerned, if this consolidates here, we are in that trade to the downside. See that? So if we're correct in the trade, we're going to have that trade to the downside. If we're wrong, we have a break. I have one break-even trade already, and I'll still be looking for a sell. So in a 4 hour, what we do, we come into the 4 hour. Remember what I said about the fractal nature of the market? You're going to see 1, 2, 3. You may see 1, 2, 3 here, and you may see 1, 2, 3 down, and we are going to have a lot of series of 3 waves going down, each building up to make one big 3 wave to the downside. And if that happens, maybe 3 or 5, right? See this wave to the downside? This was a 3 wave structure. Let me just show you some of them so you can see what these structures look like. This here was a 3 wave structure to the downside. 1, 2, 3. We're looking at this as a possible corrective structure, just like we looked at this as a possible corrective structure. And if you know corrective structure, you understand what they are. Any one of you who studied anything with Elliott called this the running flat? Any one of you who did any work in Elliott wave will know we're having a similar structure here, except this is the expanding flat. Right? This one is the running because this never went above the top of the A wave, and this one is expanding because the C wave went above the A wave. They both broke the origin of the A wave. So if you know anything about Elliott wave, you just saw two possible patterns that we're looking at. What if this is to break the top and go? Well, then we would relook at this here as the end of this bigger tree wave structure, and the start to the upside. This would be probably the start to the upside. Let's see. We're not looking. We're looking at this as a flat and expecting more downside. So far, it's working great for us. So far, it's working amazing for us. So we will keep that in mind, that it's possibly doing one more to the downside before it starts the upside. We've already broken the monthly structure. That is why we're looking at the monthly structure as a single three-wave structure. We broke this, and we think this is a single 1, 2, 3-wave structure. This is over as one single structure. So we're thinking we're going to make 1, we're going to make 2, and we're going to make 3. So for the next couple of years, we're going to be within this zone trading. It wouldn't be going very far, up and down. You can take a snapshot of that and keep it to see whether wave analysis works. All my traders already have a snapshot of that. Keeping it to see whether it works. And you would be amazed. I promise you, you will be amazed probably a year or so from now. We have trades forecasts that I've made a year from now. Go back to my chart to the very start when I started here. You're going to look at some of those forecasts and you would be really, really amazed how they turned out. Like, wow, that thing made 1 year ago. How the hell you know it's going to come this way? Well, that's because how wave structure behaves, right? That's it. It's just how wave structure behaves. I'm not saying you're going to get all those trades, right? But at least you understand how structure behaves, and that's the most important thing. If you want to be a good trader, first you must understand what you're doing, right? 1 second, guys. Let me just get a sip of water. So if you want to be an excellent trader, the number one thing you need to know is, hey, how does the chart behave? And if you understand how chart behaves, then you can become a good trader. Right? Very basic stuff. So I think most of you have got an idea what we're talking about wave analysis, what it is, how it works, and how it can enhance your trading. Let me show you some of the trends we are looking at that are going to come. And I will start from the dollar index. Right? Dollar index. We're looking at this as a flat. All of you may know what a flat, if you have any contact with Elliott wave structure, you know what is a flat. That is a three-wave structure that goes sideways, and then they should continue in the direction of the trend, right? The trend is to the upside. That is an impulse, a correction, and an impulse, right? Remember the basic things we learned. You get an impulse, you get a correction, and you get another impulse. I think this correction may be over. Let me just use that. We think it may be over. We never know that it's over as yet. But this leg is coming to an end, and that means they're going to make a leg to the upside. If they come back down, they're going to make a bigger structure, and then eventually they're going to go up. But I think it may be over, and they may be going up very soon to take off that wave. In any case, we'll be looking for a big buy back to the top. Right? We'll be looking to follow that trend up back to the top. That means Euro will be looking for the downside. Right? Simply means Euro should be starting a trend to the downside. And I've been saying that forever. I've been saying Euro is going to come to break that top and then go down forever. Right? Possible wave development. I think I've shown that. I've got a number of them. Possible wave development as a WXY. Come back to the top there. Break this top and then go down. How did that work? Going up, right? The arrows were slim. This one was a little early. They actually broke much later. If you notice, they broke here. That is this arrow. They made a move down. That is this arrow. They made a move up. That is this arrow. They made a very small one down here, which is this one. And we are going up now in this one. Right? Of course, they're not going to follow my arrows exactly where I put them. But if you look at the whole system, you can see how it works. So if that is correct to the upside, why wouldn't it work to the downside? What are the likelihood it's going to work to the downside? On the Pung, we should be expecting downside, right? Which is going to be a very nice trade for us. We're saying that they should come and break this low because that is the monthly low. based on wave analysis, they should break that monthly low before they start an up move, and they will start an up move. It's just that they need to break that low first. So within this pattern that we're looking at, and if this pattern plays out the way we think it is, right, there should be at least one. If we think that is an ending diagonal and they still have to prove it by not breaking this here, we're going to get one more down. But if it breaks, this is a huge move to the upside. I don't think we're getting that. I think first we're going to get this. So we are prepared to trade both of those, but this is the one we are keen on. This is the one we are expecting to get, right? And that's a huge trade, by the way, right? You can make a ton of money if you know how to trade that. And I said if you know how to trade it, right? So what are we looking for? We're looking for this to still go up, but very soon I think this is going to turn, and you can already see. By the way, that's what we said. Remember, somebody was some trader was saying that's a triangle or whatever, and I was like, no, no, no. I'm not even looking for a sell here. I'm at this point here. We're looking for the buy. If more downside, I will not trade since I don't have a setup for a sell. It could go some more down. Not interested. I have a setup for buy. Looking to buy. That's all. It couldn't be much more clearer than that. See? You don't want anything much because that's how structure behave. That is what wave analysis is about. I tell you very clearly, if it goes a little more down, it's possible within this structure, but I am looking for the buy. You can't want it with more confidence than that, please. This is not a, if it does that, maybe it's going to. This is very clear. It could still go more down and based on this wave theory, but we are not looking for the sell because that is going to finish very soon, and we're looking for the buy structure. Now I'm telling you, it's coming to the top and it's about to end. Stop looking for the buy. It could get all the way to the top here. You may not get a very good buy to the top there because you see what they're doing here. But we're looking for the sell the minute they break this structure. The minute that structure is over, we're sitting in that for a sell. And that means anytime now, anytime soon. Remember, the line has no value. We're not saying they have to go to that line. That line is not is not somewhere they're going to stop, somewhere they're going to bounce off. It's not a support and resistance. We are saying once this goes up here, somewhere along here, we're going to look at this structure, and that structure start to turn down. We're going to have a very, very strong move to the downside. That is what we're saying. And this would be an amazing trade if you know how to trade it. If you know how to trade it, this would be one hell of a trade to the downside. And we would be trading that. That means Aussie is going to give us a similar trade to the downside. That means New Zealand is going to give us a similar trade. And the New Zealand one I posted way before today, that this structure here, right? Possible move to the downside. This structure eventually is going to give us that big move to the downside. See that? That structure eventually will break. And you can see the way the structure is going up, right? It's still within the channel. It hasn't broken the channel. They're still within this channel, but this channel is dying out. Eventually, this is the trade you want. Remember what he said. If you have an impulse, you're going to get a correction, and then you're going to get another impulse. Are you ready for that trade? That is the question. Are you ready for the trade? Can you see? We are looking within this. You see, we are showing that still more upside here, right? I still think more upside, but this is about to break. It could crawl its way up to the top here, and we may even get it much earlier than this break. If we see a break at the top here, anywhere here, we may take this trade down. As a matter of fact, we were in this trade down. And some of our traders were in that trade up. Right? So some of our traders were in this trade up. So we're going to be looking for this trade. Doesn't mean we don't trade these small time frames. Right? We do. And likely we're looking for this. We're not interested in this up anymore. There is a trade here I told my traders they could likely do this and then one more trade there. So if we see this structure, we will buy this trade. But if we don't see that structure, we're looking for the sell. It's very simple. And it's very straightforward. It keeps you on the right side of the trade. That is what is important. You're always going to be, 90% of the time, you're going to be on the right side of the trade. But if we take that trade, we're not taking off the trade when it comes to the trend line. We're going to watch the trade, move it to break even, and wait for this to break. And we may have to do it one or two times that we're going to have break even trade, but eventually it's going to get to this target. And that is how we make thousands of pips in our trade. One of such trade I'm in already. Let me show you this one. Euro Oz. I'm above 100, and let me see how many pips up. I'll tell you exactly so that I don't really. I'm 132 pips up on that Euro Oz trade. See the pattern? We're anticipating that this thing is going to get its way to the top here, and then we will make a decision. What at some point they're going to have this. See those big corrective structures? We're anticipating it to probably come here, do this, and then do that. Of course, I'll get out of the trade and be looking to buy again. What is the trade we took? I actually posted it. By the way, this is the second entry I'm in for 132. The first entry I had was this one. And most of you may have known that. The first entry we had was the break of this structure. See that? And then it started to do this. So what we did was we take break even. We took the break even trade because I told my traders, based on this structure here, it is actually not going as yet. And we don't want to live through all of this. Right? What we should have done during the news event in the Asian session was put an entry order there, but I wasn't there. I think only one of my traders did that. Right? He put an entry order there and he got some of it. Right? But what we did again was buy the breakout. We got that, and this is the trade I'm in, and here is a chance to buy the breakout if you want. I wouldn't advise you to do that because we have divergence in the chart, and at some point, let me give you, we have divergence in the 1 hour that is here. We have divergence in the 1 hour, very strong divergence. See that? So I wouldn't advise you to buy this breakout here now because very soon, I think this one here is going to come back down. They're going to probably do this, and then they're going to come back down here for the deeper correction. Remember that deeper correction, and then go. This is where I'll get you to buy again because you're going to have a next couple hundred pips to the upside. Maybe even sell it down here. Right? So this last move here may or may not go. It's a risky one because of this. But if you're in a trade like me, you don't have to worry. You already have 132 pips in your name. Right? So I can move my stop from break even, which is where it is right now, to here. As soon as this breaks and confirm the breakout, I would move my stop to this level. See? I'm giving you guys some of the tricks of the trade that we do, right? Many people say, well, what do you guys do in that room? That's what we do in our trading room and in the webinar. We actually have strategies of how we trade. Doesn't mean I'm going to give you all of that in trading view. You're not going to get it. Even here, you're not going to get it. You still have to get into that room to learn the rules. That's the number one thing. We have rules. It's not that I may or I will. We have rules, and you have to follow the rules. The rules are very clearly defined when you take the course, and you just have to follow the rules every single time if you want to be on the winning side of the trade. That's simple. Right? Showed you that one. So let's come back to the big trends again. We showed the euro, the pound, the Aussie, the New Zealand, the Swiss, showing those possibilities. Yen showing us a very strong probability of a very big trade. Yen is already breaking. See, this morning we were looking at this structure. It hasn't given us a setup for a bias yet. We're looking for the breakout. We're going to be in this trade, right? But we are not taking this trade as yet. As a matter of fact, let me see if we have a trade set up for our trade. Maybe, just maybe. Let me see in the 1 hour. No, we were not. And by the way, my traders, remember why I said you don't want to sell this thing. One of my traders asked me that question this morning. Why are we not selling it then? You have your answer now, right? Who is it asking me? You see what I said, right? You don't want to sell this. You're looking for the buy setup. I don't know if the trader is in here, but he knows, right? We're looking for the buy setup, not the sell. This was something we discussed about 15, 20 minutes in our webinar this morning. We're looking for the buy setup, not a sell setup, right? Another one, we're looking for a buy setup. Anybody else is having song? Is there a song problem? Song is fine, so it's probably just his side, right? So we're looking for a buy setup here also. If we get a correction, wait for the correction. You always get them. And we're looking for a buy setup in the euro yen. Let's see what the euro yen is doing. Yep. By the way, you guys, anybody took the trade? Any of my traders took the trade? Come on, this was a trade call here this morning. Take that trade to come here, right? Watch it when it breaks the stop and put it to break even. Any one of you, none of you guys took the trade? Any one of you guys in here? That's a trade, right? We're going to be looking to take that trade. Let me see. We almost missed it. Should have been looking at it if I wasn't in here, right? It's a good trade. This was our buy signal. We were buying here and wait for it to get to this stop to put it to break even. Right? I'm pretty sure some of them did. Probably not going to say it here, but some of them did take that because that was a trade call in the trading room this morning, right? So that's it. Remember, we update these charts twice daily. You have updates twice daily. So when I post a chart in TradingView, that's it. I don't have to go back and repost that chart every hour for you or every 2 days, 2 times, 3 times a day for you guys. It's up to a lot of people to make their own decisions, right? But we do this twice daily. I would do this twice daily for my traders. They get twice daily updates. Somebody saying something about a goal. Yep. After this breakout happened, they went up, they came back, went up, came back, and then it took off. The last buy that we were not trading this piece because we were still looking at it corrective. The last chart I had was trade this buy here. I think that was on a daily or in a 4 hour I posted. If it breaks above that top, then you buy. We're looking for more downside, but I said if it breaks that top at any point, buy if it breaks this top at any point. Because when we look at the structure, there is why I'm not sure I should be going into so deep to explain to all of you guys that, right? But this was a possibility only. There was a good reason and the structure ended there and they're gonna go up, right? So we were looking at that only as a possibility. It's one possible move down, but if it breaks that point at anywhere, you're supposed to be in that trade if you trade gold, right? So you're supposed to be in that gold trade if you're a trade gold, right? See, that's it. It's that simple. It's not difficult. How do we know that? Well, it's because we're using strict rules, we analysis, we understand what we're doing. There is some more in it. I can tell you, you have to be careful. There's divergence forming, but it's not the end of the up move. There are more in it. So if you hold on a little more, yes, you have more upside. Now, I'm not going to go into the details of tell you how we're going to know where it's probably going to end, but you'll figure it out, I guess. There is more upside in it. I think they're going to at least hit this target. Watch this target. Let me help you then. Watch this target here. When it gets to that target, we will look at this structure and make a decision. There are a number of things we look at to make that decision. But watch that target. There's a 90% chance of hitting that target. I think I may have said this before in the trading room in one of my webinars. There's a 90% chance they will hit that target every time. That is if you put the fibs correctly, if you know how to put the fibs correctly. See? So let's go take questions because I think I've showed you all what I promised. I told you what we do was trade analysis, how we use it, how it's going to help you to make your trading better. I showed you the waves, the bigger waves coming as we promised. So let's get the questions now. And then if you're interested in my course, here's what I'm going to tell you. I don't like to answer questions about a course here. It takes up too much time. While you guys are typing a question, this is what you need to do. Add me to Skype. Everybody knows how to get Skype. Skype takes you 3 minutes to download. And all you have to do is add me. You don't have to do anything else. You just send a request to add me to Skype. My Skype ID is MANGAL457. You write it down and send me a request. Once I get a request from Skype, I will send you the details of the course immediately. If you want more details after that, most people don't ask me for more details. They just pay immediately for it. If you want more details, let me know and I'll give you. We will discuss whatever it is. So we don't waste everybody's time in here. We don't want to do that, right? Just add me to Skype and send your request if you're interested in the course. If you're not interested in the course, then no big deal. No, it applies to any chart, not only Forex. It applies to any chart. Index, anything. To the indices, to the stock market, to anything, as long as the chart. That is why I did this chart. Remember, this chart also, one freaky guy came in and was writing nonsense in it, and the S&P 500, I think, was that chart, right? While everybody was freaking out, I was like, you know what? When this first move happened here, half of TradingView was freaking out and said this thing is going to go down crazily. The minute they saw that, and I was like, no, it's not going down crazily. It's going to go sideways. I actually posted that chart, and I'll show you where I posted way before. That is this one, right? I said, no, this thing is going to go sideways for 6 to 10 months. It's going to go sideways 6 to 10 months, and then we're going to have another wave up. You want to see what happened? It went sideways 6 months. It's that easy. How did I know that? Because you have to understand how wave structure behaves. Like I said, they behave the same way over and over. It's that simple, guys. It's not magic. I didn't go to my crystal ball and shake it and say, tell me what this is going to do. I understand the way wave structure behaves. And based on the way wave structure behaves, you can tell what it's likely going to do. And you will be right 90% of the time. That's how simple it is. Everybody's freaking out because they see a big red candle. And I was like, why are you guys freaking out? There is nothing. Let me get this to you, all of you that still remain in the webinar, because we had about 171 and we have 58 now. Some people, all of you, listen to this very carefully. There is nothing fake in the chart. If you put that thought in your head that you have fake breakouts and false breakouts, you're gonna lose your account. Nothing in the chart is fake. If the price went there, the price the price went there. That is fact and that is statistic. It's not fake. Breakouts are not fake. Your understanding of breakout is what is wrong. It's not that there is a fake breakout. It's your understanding of what is a breakout and how you should trade it that is wrong. In all my charts, I will say, if you have a strategy to trade this breakout, take the trade. Most people don't have a strategy to trade breakout because they don't know how you should treat the breakout. And that's their problem. They think it's false. It's not false breakout. I did not say this was going to break out. One person called me and he said, okay, can you help me with this trade? Because he's in the trade. And he says, is it going to go up more right now? I said, no. This chart will not go up immediately. We're going to have some consolidation to prove the upside or a possibility back. It comes and it retests that low again. That possibility exists. I want to ask you about your trade management after you open trades. That's a long process. That's not something we can go into right now. It's going to be very, very long. It works in all markets. Do you exist based on divergence? No, we don't exit a trade based on divergence. That's not how we do it. I have a question. Do we look at the 15-minute charts? No, that's we already just answered that already. You made the distinction between predicting the market, predicting patterns and market, and you said you're not predicting market but surely patterns. That's exactly what I did. What we did. Yeah, we don't predict the market. We don't say this is how the market is going to be. When I posted this chart, I didn't say I actually wrote this right that I have no idea about what S&P 500 is. And one very nice, very smart guy, I should say, in inverted comma, who came and said, "You got to be careful of this guy. He says he has no idea what S&P 500 is." I'm like, how dumb are you? You know, like really, you really think people are going to listen to that nonsense? Of course, I have no in-depth knowledge of what S&P 500 is. I don't trade stocks. I don't trade indices. I don't go into in-depth knowledge of them. And I'll be honest about it. I don't have it. That's true. I don't have in-depth knowledge of these things. But if I started trading that, I can promise you I would know it very well. That's the point. What I did in the chart was what I'm telling people is I used the structure we had previously. I looked at the previous monthly structure and I said, based on the monthly structure that we have right now, based on this entire structure that we have, it is very likely that this will consolidate here for 6 to 10 months. That is what I did. I didn't predict the market. I predict the pattern it is likely going to make. That's all. It's predicting the pattern, understanding the way structure works. It's not about predicting the market. I have very little knowledge of S&P 500. I'll repeat it here again and again. I have very little knowledge of it. I don't study it. I don't trade it. And the people who assume they have a lot of knowledge of it, who trade it, they were the one freaking out and say, "Oh, it's going to go. It's a big bear market coming. It's going to go to the dogs." And I'm like, you guys have no knowledge of it. You can say whatever you want. You know nothing about it if that is what you were saying when it was going. Go back 6 months to when that time I made that chart. Look at all the people who were posting, and you would see what they were posting. And those are the guys who assume they know fundamentals. They don't. It's simple. It's very simple. We just look at the patterns. We don't care why. It's not a breakout. That's not a breakout. You don't know breakout if you think that's a breakout. I told you one person wrote me a special because he's in the trade and he said, I need help. And I said, no, that's not a breakout. The trend lines have little value with structure. You guys don't get it. You don't believe me. You don't get it. The trend lines are just an indication to tell us what type of structure they're making. It's not the breakout point. It's not what you have to understand patterns. And when you understand patterns, you understand that if it breaks the line, it doesn't mean it's going to go right now. Not every time. Sometimes, of course, the pattern is complete and it's going to go. Sometimes the pattern is incomplete, which means it is not going to go. Most times, yes, the account I'm trading only allows me to trade currencies, silver, gold. That somebody's asking if I only trade currencies. If you're gonna need a move the stop the break even, why not just exit the trade and re-enter low? Nope, nope. That's totally incorrect. If you do that, like I had pips up in a lot of these trades. You don't do that. If you do that, the trade is gonna go without you. Most of the time, it is going to go without you. Believe me. That is something we have. That's a whole lesson I do. I can't go in depth into that. That is first you have to understand wave structures, and then you will understand why we take that break even trade rather than take the profit and wait to re-enter. On what did you base in choosing the correlation and MACD? What correlation and MACD? Did I say anything about correlation and MACD? I really don't remember saying that. Viewer 556. I don't know where you get that from. I know, can you wait for the breakout to come back to the point? If that is your strategy that you've tested, that's a good question. Can you wait for the breakout to come back and test the point of breakout before you enter the trade? If the chart you're trading, you tested it and it worked good for you, great. That's your strategy. We have a different strategy and I can't share it with you. Yes, that's something I don't get. Uh, that's the problem. Well, that, like I said, if you take the course, you'll get it. What was the best book you've ever read on wave structure and wave patterns? It's not about what is the best book I have read. I've read only one book on wave structure and wave analysis, and it's not a wave structure and wave analysis. It's concretely on Elliott wave. It's the Elliott wave principles, and I've used the one that is rewritten. Remember, that is a rewritten book. It's not their work; it's Elliott's work, but they reread the book. That is at elliottwave.com. But even if you read the book, and you have to read the book if you're going to take my course, that doesn't mean you will understand structure. You will understand the concept, the basic principles of how you should label and how you should do that. You will not see the structure in the chart. And that's the problem with most of the traders. They don't have an idea how to identify the structures in the chart unless and until they come to our room and then they learn how to do that. When you enter a breakout, do you wait for the cancel for the candle to end? No, come on, that's a really newbie question. That's not what I'm going to do here. But how do we know when it's going? Well, that's you can take my course and learn that. Sometimes the consolidation after it breaks out is long, but it is a strong impulse. It does not consolidate that long. I don't know. That depends on the chart. There are charts that does that. They break out, they consolidate for a long time, then go. I can tell you one chart that does that. We have two traders who trade it and they made a lot of money out of it. That is the Euro Swiss. It did that, and we discussed it every day. We were like with them. I hope you guys are still in. You have the patience to still be in that trade. They was like, yeah, we are still in. I said you're gonna wake up one day to a very big move, and that's exactly what happened. They woke up one day and they had a huge impulse to the upside, which we knew were coming. It's just you have to have a lot of patience in it. Do you put us straight into the trading room or only after the come? No, no, you get straight. You get access immediately. Once you join us, you get access to everything. You get access to the trading room, but you don't get your practical part. The practical work you get only in the next upcoming course. The next upcoming course we have is June. We have about 15% left. About it's about 85, 8 to 85% filled. Depends on how much we're gonna take. And you can still join us. You can even if you want to take the course in December, you can join us now. You will have access to the webinar. You'll have access to the trading room. You'll have access to the recordings. You will learn the stuff on the way while you're waiting for your time to do it. If you want to do it, we've had people who paid in January and took the course in November. That doesn't mean they weren't in our room. They were taking trades. They were trading. They were making money because they were in the trading room and they were in the webinars. And then they wanted to learn the stuff themselves. That's when they get into the practical part. No, no, we didn't say anything about that. Somebody keep asking the question, similarity with MACDs. You're not going to learn. Here, guys, don't try to figure out what we do with the MACD. You're never going to figure it out. I promise you. Don't even try to ask the questions 300 different ways. You're never going to figure it out. It's not how we use it. And when you come into the room and you learn, then you're going to see how we use it. That's not how we use it. I can understand put out questions 6 times and see if it's not correlated. It's not the similarity. That's not what we're looking for. The coloration, well, whatever. If you said coloration, it's still not that. That has nothing to do with it. I could take out the color from it. We could do it. You could do whatever you want with the MACD. It wouldn't change what we do with it. That's not how we use it. The Aussie New Zealand, we can look at it later on if we have time. Uh, No, no, I know you're not trying, but there are traders who try to ask the question, hoping that they're gonna get. It's. I have to go through the rules of how it works. Let me tell you guys something that you may not know. We have rules on how we put trend lines. Yeah, we have rules on how you should put trend lines. That's it. If you're putting trend lines and you don't have rules how you're putting it, you're likely putting it wrong. Why a fib impulse? We have rules on how we use fibs, and the rule says you should fib the impulse. That's the number one rule. You just learned something from me for free, right? We always fib the impulse. I see people fib the corrective structure and they're looking for it to go the opposite direction. That's incorrect. It's incorrect. That's it. That's simple. That is why we said this thing has a 90% chance of hitting this 270 if it goes up. If they do this and they hit that, they're likely going to pull back then, right? So there is a short trade to the upside, not a big one. There's a short trade to the upside. So because it may happen. Let's see. It's still in a consolidation, right? Can you take an impulse that's going in the opposite of the? You can, but you will not know that that's an impulse going the opposite of the first impulse. I like that question, by the way. That's a smart question. That's something I could discuss with you guys. So let's assume for a second that this is the impulse going up in this one, right? The question the person is asking, right, is can if this thing goes here and then start to fall, which would complete this pattern? We don't know how high it's going to go, and it started. Can you sell this impulse here? Yes, you can, if you know that that is a turning point. Right? If you know that this is the turning point, it's going to turn, you can sell that impulse. That means you have to understand the complexity of the structure and that that structure is ending there. Because if you don't, then you wouldn't be able to sell the first impulse, right? You wouldn't be able to sell the first impulse if you're not able to identify that that's maybe the first impulse going in the opposite direction of the previous bigger impulse. You follow what I'm saying? That's a good question, by the way. I like your way of thinking. You're trying to get some very nice information, and you're actually getting nice information out of me, right? Your questions are very, very basic. Very structured. I like the way you're asking questions. You should be in our trading room. You should take the course. You're not just asking me, can you tell me what the yen is going to do or what this is going to do? You're structuring your questions very nice. Well, call me. Give me a call and let's make a deal. Yep. You watch the euro when it hits that top. When it breaks the top, then we're gonna start to look for it to go to the opposite. Euro Oz just spiked up. Wow. Yep. That gave us the next couple of pip there, right? Let me see how much I got there now. Yeah, 182 on the euro Oz while we were talking in here, right? I was just 132, right? So 182 now. Great, right? You can keep trades like those. Those are nice trading. Draghi speaking. I didn't even know Draghi speaking. I don't really care if Draghi speaking or not. To see how we're in the trade, and that's it, right? I don't care. I really don't care if Draghi speaking. Nora is my trader. Nora knows that. I don't care. Draghi could be talking the hell of it. I have my traded break even. Let Draghi do what he has to do. I'll do what I have to do. Right? Nora's in our room, by the way. Nora knows that. I don't care what they're saying. I mean, really, you guys may think it's a joke, but I don't care what they're saying. Let them say I'm in the trade and I have it at break even. No, it's not that. Here is the thing. It's not that. Is that these structures by nature will do what they have to do regardless of what is happening, right? Because they're not only based on what Draghi is saying. And what Draghi is saying to us is not exactly what Draghi is going to do when he stops speaking to us. You have to understand there's a difference between the news Draghi has to give to the public and what Draghi will be doing in reality. I just told you guys that, remember? This news he's giving out is for mass consumption. It's to make the mass feel happy. It's like a dose for all of us to feel happy that Draghi is doing his work. He's gonna make the euro zone the best place in the world. Right? That's your dosage. So if you take the dosage and you have you're having that nice feeling, that is what they expect you to do. But that's not what they're going to do. They will never tell you what they're doing. Never tell you what they're doing. They have their plan. It's not for the mass consumption. If you don't know that about news as yet, you still have a lot to learn. So we don't care what Draghi is saying. He's not talking what he's going to do. He's trying to to control the mass. He's trying to quiet the mass. He's trying to make people feel happy. He's trying to make people don't revolt against anything. They're actually protesting here and protesting there. His job is to not to raise more protest, but to make everybody say, oh, well, they're doing the right thing. It looks like they're going to get it. Finally, yeah, they're doing good things for us. Like Donald Trump, you guys watching the U.S. election? Donald Trump is saying what the entire United States want to hear: make America great again. Who doesn't want to hear that about their country, right? I mean, even my small country, the president come out and say, we'll make this country great. It never was great, but they can come out and say, make it great again, and then people will believe them, right? It's what the mass wants to hear. You sell them, you package it and sell it to them, and they will buy it. Likely, a lot of people will buy it. People are buying it if Donald Trump is on top. He's still doing well, right? That's the point. He's still doing well, right? So we don't take those information. You know, it's gonna build a wall and make your neighbor pay for it. You try building a fence and ask your neighbor to pay for it. You'll see how that works. You go home and say, I'll build a fence here, and you tell your neighbor he has to pay for it. See how that works. It's not gonna work very well for you. I can promise you that. There are people using the Bloomberg terminology. Yeah, yeah, that's don't. They have a lot of money. That is all I will say. It's not helping them. I don't know. Maybe it's helping them. I can't say for sure, but with 20,000 a year for that, it's not. I don't think that's what you need. What's my favorite structures to trade? Wedges, triangles, and wedges. Those are the best. They have 95% guarantee they will do what you want them to do. Flats are a little difficult. I don't have a system to collect. Somebody's asking again for me to create a monthly subscription for the trade for the course itself. I don't have a system to manage that. I really don't, and it's a lot of time consuming for me. I'd rather be trading, right? I'd rather put the five standard lot on the Euro Oz while I'll be looking to collect money from you guys. I don't want to do that. I don't want to even get into that, right? I really don't want to do that. Aussie is about to break the structure. No, you got to be careful. Don't rush into it. I don't think they're breaking out as yet. Let's go look at it. Just so you guys, I'll look at it and then we'll call it a day. We're in the 4 hour, right? If it breaks, it doesn't mean it's going to break. Watch the structure. It may still climb up some more. I still think they may go some more. But if it breaks, yes, you can look for the trade. We could see some more upside, right? We took this break. Remember, we took this break here. We took this first break. This was the first break we took, right? Got it to break even. And now we're watching this. This could still go some more. I think they're going to retest the top before. We may get a 618 trade. So just watch it. All you have to do is put your chart in the 618, put your entry order in the 618. Don't do it if you don't know to manage the trade. By the way, we have an exit strategy if that 618 doesn't work for us. If you don't know it, don't take the trade. No, no, no. Not that I don't watch the news. I don't trade the news. There's a difference between watching, understanding, knowing the news, and trading it. We don't trade the news. That's what my scripture was saying. We don't trade. Somebody's asking if I watch the news. We don't trade the news. That's a whole different story, right? No, you're not in a wave tree. You're not clearly in a wave tree. That's your problem. You have the wave count wrong. It's not a wave tree. If you have it as a wave tree, it's incorrect. Yep. I hope you got that. We don't trade the news, not that we don't watch the news. We're aware of what's happening around, right? But we don't use that as a strategy to trade. Because here is why. The news could be positive or negative. The reaction to the news is going to be different. You don't know how the market, the bigger market, will react to the news, whether it's positive or negative. You're trying to catch a react. You're trying to react to news, but you have to understand that there's bigger people who will be reacting to that news, and they may not react the same way you react, and you're likely going to lose. So you should not do that, right? We trade sometimes in a news event. If it's a technical trade that goes in the direction of what we're looking for, then we take the trade. And be honest, it's not fair. It's not good. We'll probably stop doing it because we get 50-50. It's not the best strategy. We sometimes do it during the news event if it goes in the direction of the technical trade. And because we put a very small stop in that case, we get a 50-50 win rate. We lose a lot of them, we win a lot of them. But when you win like 5, 10 to 1, when you lose 1 to 1. But still, I don't like the idea. I don't like the strategy. I don't like to lose 50% of my trades. It's not a great thing to do. Psychologically, it's not a great thing to do. So, okay, guys, I want to thank all of you for coming. If you're interested in the course, in the June course, please contact us as early as possible. Here's my Skype again. If you're interested in it, it's let me just type that. Mangal. Oh, sorry, not typing. Send me a Skype. Just add me to Skype and I'll give you the information. Right? I hope what I did help you. Watch those trades coming up. Very nice trades you're going to get. I'll post this on YouTube a little later. You can share it around with friends. Thank you for coming. Have a wonderful day. Trade with care. Right? Thanks, everybody. Bye bye.